So I need a little help here too. You've said repeatedly you have no tolerance for inflation, and yet we are seeing above target inflation repeatedly for 5 years.
And you didn't increase rates like some analysts thought. So what we're going to talk about today is inflation rising, oil prices rising, the threat of the Iranian conflict still at its peak. So what's going to go on with mortgage rates? That's what we're going to talk about in today's show, folks. So the first thing I like to do each day when I come in as a mortgage advisor, I look at the chart. This is a 2-day chart. So this is what we've had to contend with since yesterday morning. We had the Federal Reserve. We knew they were coming out, but we really didn't know what they were going to do or say. So the markets were kind of steady throughout the day, and then all of a sudden Warsh said what he said, and then the markets rallied. And then it kind of pulled all the way back to lower prices at where we are. So if you're trying to figure out what this chart is or how to read it, all you have to understand is this. That number up through there, if it's red, that's not good news. It means mortgage rates are going up. If it's green, that's good news because mortgage rates are coming down. But the bigger the number, the bigger the adjustment. So plus 0.03 is not really going to do anything, but it was a roller coaster ride over the last 24 hours and 48 hours. So let's get over to it so I can explain this all to you. Here's what the Federal Reserve did. They came in yesterday and they look at this stuff over through here. Okay, they basically target or they control that rate over through there. It's called the federal funds rate. All that is interbank lending. If one bank needs money, they can go to another bank and get money lent to them at that rate. Don't you wish we could? But they look at these things right over through here. Do you see that number up through there? It changed a little bit. Yesterday it was over 4. Well, we had that reading come in today. It's 3.7. No, it's not 2, but it's down from 4 where it was. That's the PC, the number one inflation number that the Federal Reserve watches. Then we got some numbers on the unemployment numbers today. We got initial jobless claims and continued claims. I'm going to show you those as well. And then we have the GDP. Yesterday it was over 2%. Now we're about 1.5%. So let's analyze these things and figure out, okay, based on this stuff, what's the Federal Reserve most likely going to do? Well, the good news is today's economic calendar, here's what we got. Remember the chart that we just saw? It said PCE. That's the personal consumption expenditure. That's the inflation number that the Federal Reserve looks at. Look at all the numbers we got today. So remember what I told you. When you got core in front of anything, it strips out food and energy. Okay, so in this case, we got the personal consumption expenditure and inflation numbers that the Federal Reserve looks at, but we got the core number that strips out food and energy. Then you have over here, it says MOM. That means month over month. So then you got down here year over year, and then we have the quarter Q2 of this year. So let's just break this down. Now, this is when you extract out the energy pieces. So the last reading month over month was 0.3. They thought it would drop to 0.2. It went all the way down to 0.1. That's good numbers because inflation on this number is going down. Okay, now let's look at year over year. Last reading was 3.4. They thought it would go to 3.3, and it did go to 3.3. Give that a thumbs up. Now you go to the core PCE prices, Q2. We went from 4.4. They thought it would drop all the way to 3.5. It went down to 3.4. So far, we're looking pretty darn good. Okay, so let's go down to the bottom here. PCE index, 0.5. They thought it'd go to negative 0.1, and it did. Okay, so inflation so far on this gauge is going in the right direction. It's not 2, but let's go to the next piece of the puzzle we're going to get, and it's the jobs market. Okay, so today we got initial jobless claims down through here, 188,000 last time. They thought it would tick up to above 200,000, and it didn't. It stayed below 200,000. Then you scroll up to the top, continued claims, and this is where we try to monitor. Is this going to stay above the $1.8 million number? That's what we focus in on. It's dropping down. So this is telling me not a lot of people are getting fired. It's still low, hire, low, fire, but people are able to get back in the job force. So that's good through there. Inflation's coming down. The GDP's starting to trickle down a little bit, but overall, painting a pretty good picture. Well, let's get over to the other pieces of the puzzle that the market looks at. It's oil. I need you to do 2 things. If you're trying to monitor mortgage rates or you're trying to buy that house or refinance or you're a realtor or loan officer, do me 2 favors. One is watch oil because here's how it works right now. While the Iranian conflict's going on, you have oil prices. If they go up, That means inflation and prices are going to go up. Well, that means interest rates are going to go up as well. So if you see oil starting to stabilize and starting to come down, well, you're going to start seeing mortgage rates and interest rate ease. If you see the conflict continue and get maybe a little bit worse, what I'm surprised is this isn't at $100 a barrel right now. So that's good news, but I'm trying to scratch my head saying, okay, with all this turmoil, why isn't oil prices at $100, $120 a barrel? So watch oil. And then the other thing is subscribe over there. So every day when I come in, watch about 5 minutes. I'm going to give you all the context and the data you need to know that's affecting mortgage rates for the day. The other thing that's really going on when you see oil up like that or down like that, you're going to see the market's doing pretty good. We have the Dow Jones up 200 points. We have the NASDAQ up almost 500 points. Remember, before the war started, the Dow Jones was at 50,000. They were celebrating. It's now almost 52,000. So a nice little rally through there. What's helping all this stuff? Earnings reports. Look at the earnings reports behind me. It's a huge earnings week. I forgot to do this, but if you go down through here, look at the earnings report. Look right above my head. BE was beat by 32%. You go over to this and CNC, I don't know what that is, but they beat by 12.8%. So you're now saying, okay, these companies are beating by their earnings, so maybe they're increasing prices more than they need to because they're just ripping through earnings. Something I might think about when it comes to those inflationary numbers. So now, what is the Federal Reserve going to do at the next meeting? Yeah, it's way down the road. Let me let you know what I'm advising my clients. So if you're working with me, folks, I'm licensed in all 50 states. I have a slogan. This is my slogan. It's one application, one credit pool. You're going to compare your loan to 30, almost 40 different lenders. Now, here's why and how. I work at a bank that licensed me all throughout the whole country and Puerto Rico. But we're also set up kind of like a broker with almost 40 other lenders. And here's the cool thing is we can use their rates, their fees, and their loan programs. So there's 40 different of them. Why? Well, because they have different programs. You might get approved at one and denied at the other. They have different rates. They have different fees. So instead of going there, and having everybody ruin your credit, get back with you with quotes you don't know what to do with anyways, reach out to me. I'd love to help you out. But if you're coming into us right now and you got a contract in your hand that's accepted, we're locking you in. Because the Strait of Hormuz, if it closes down, oil prices rally to $120 a barrel, you're going to see rates jump to 7%. I don't want that for you. But what if you're looking to buy down the road or you're looking to build? I'm still saying do those two things. Watch oil. As oil goes up and down, that's what's going to happen with your rate. If you got enough time, I think the Iranian conflict's going to end here soon. When that is, I don't know. And when that does, wait about 30 to 45 days. That's when you're really going to see, okay, did Iran abide by the rules? And if they did, that's when you're going to start seeing oil come down and stay down. And then that's when you're going to also see rates coming down as well. So I think you're going to be okay there. If you're a current homeowner, we got some tools for you. Just plug in your mortgage information right up through there. It's called Rate Watch 2.2. What we're going to do is we're going to monitor your mortgage rate, your payments, all those things for you. So the next time mortgage rates drop, you don't miss it. But you might even say, okay, Dan, I'm drowning in debt. I have a pretty good rate, but what do? I'm sitting on a bunch of equity. Well, we got some tools for you as well, right through here. The debt relief calculator. We got a whole bunch of these things. Down below, there's a Stand store. All the tools are free, so check that out. Even if you're a realtor loan officer, got some fantastic tools for you down through there. So let's get back. What's the Federal Reserve going to do in 48 days? There is the most probability right through here. Remember when I was over to here, I should have told you guys, make sure you pay attention to these numbers. Here's why. Federal funds rate, 3.5 to 3.75 right now. We're going to go over to this right now, 3.5 to 3.75. They are saying, whoa, there is a 60% chance that the Federal Reserve is going to increase rates at the next meeting. Take a snapshot of this. We're going to continue to monitor this. I'm saying they're going to stay steady. They're going to sit on their hands at the next meeting, especially if we can have a conclusion to the Iranian conflict to stabilize oil. If not, and you see oil staying sticky at $90 or higher, you might see the Fed kind of be forced to increase rates. Let me know your thoughts down below. I love your context. Let's go over to end the video with the chart. So far today, we have the MBS is up 3 ticks. We got a great print on inflation. We got a really good print on the jobs report. I think just the unrest in the Middle East increased is the culprit behind all this. So hopefully now you understand a little bit more about how all this news and everything affects these things over through here. And if you want to watch mortgage rates each day, if you're at my website, just click this right through here. It says mortgage rates. Going to bring you right up to our website right through here. This is free. So if you're a realtor loan officer, check it out. It's going to give you all the mortgage rates that are associated with all the top 6 programs. It's also going to give you the big drivers of the day, what the 10-year Treasury is doing, because that usually shows the direction where mortgage rates are going. It's going to give you the top news events for the day. Okay, right through here. With those events, how are those affecting mortgage rates? Going to show you right down through here. The trend for today so far is rates are going lower. This is going to give you my most recent podcast. Going to give you the snapshot with the Dow Jones, the S&P, and all the indices are doing. At the bottom down through here, it's going to tell you the poly markets. What are they predicting the Federal Reserve is going to do at the next meeting? They're saying a 93% chance they're going to hold. This is over here a 100% chance they're going to cut. What are they going to do? Follow my channel. You'll learn every day as we approach that meeting. Thanks for watching, folks. Again, if you need some help with a mortgage, I'd love to help you out. Otherwise, hopefully now you understand what's going to go on with these today, tomorrow, and the whys. Thanks for watching. Bye-bye.